Hi, this is Christina with San Diego Real Estate Live, and we are here with James. Thank you so much for coming back and doing this great hacking loans. I'm excited.
Thank you for having me back on. I am honored that you would bring me back on.
You did such a great job last time. If you have not watched our first video on VA loans, you definitely want to go back and check that out. James is a Jedi when it comes to lending, and that information will absolutely blow your mind, give you lots of points of reference, and really make you feel comfortable with the lending process when you're looking for your VA loan. So we are here. Can you tell everybody a little bit about yourself, who you are, where you came from, just to kind of give them an idea if they haven't seen you before?
Yeah, absolutely. So James Carmody, I'm a private mortgage banker with Synergy One Lending. We're a nationwide mortgage company. VA loans happens to be one of my specialties. I've been in the business for about 20 years, served almost 3,000 families, and absolutely love what I do. At the heart of it, I'm a math nerd and a very social person. So I just, I like helping people get into houses and make their financial dreams come true.
Yeah. So why are we here? We are here because we're house hacking. We're looking at VA loans, and we're not talking about single units. We're really talking about like the 2 to 4 unit, right?
Exactly.
So this is really for that VA buyer that is looking to really expand your portfolio, right? You want to invest in property. You want to maybe get some renters. You want to be able to have somebody else pay for your, house, kind of fun thing like that, right? So let's start off with, how do you even get started with getting 2 to 4 units with a VA loan? Most people think you can just buy one house. So why is it different?
It's a great question, and it's one that we get a lot. People come to us and they want to buy a condo or they want to buy a house or a townhome, and that's all fine, well, and good. And then usually it's like one person on the team or in the group buys a duplex or a 3 or 4 unit, and then their buddies will text and like, hey, I want to do what you did for them. And that's kind of how it is. Okay. So the long and the short of it is, up to 4 units is considered residential property.
Okay.
And so your VA loan, if you are eligible, you are active duty or you're a veteran, or you've served more than 90 days, you are most likely eligible for a VA loan, and that will work for you on a 1 to 4 unit. So duplex, triplex, 4 unit. And how the VA loan works is it's guaranteed by the VA, and depending upon your eligibility, in most cases, it should be 0% down.
Okay.
And that doesn't change whether you're buying 1 unit, 2, 3, or 4, which is really cool. So that's where, a lot of young service members, are like, hey, I'm totally cool with sharing a duplex or 3 or 4 unit with neighbors. The key is you gotta live in one of them. So they gotta occupy 1 unit, and then you get to rent out unit 2, 3, or 4, and you get that rental income.
Wow.
So it's really a powerful way for someone to buy a property and really start to build out their real estate portfolio for the long term. Because we know that units in San Diego are gonna do really, really well long term.
Yeah.
So it's, it's a tremendous financial benefit.
So just giving our listeners a little bit of an idea of the difference between the two, though, because there probably are, I would think, different qualifications. Maybe there's 1 or 2, I don't know, because you're the expert, but what is the difference if I were going to buy 1 unit versus like 2 to 4 units? What are, the extra qualifications I might need, or could you just give us an idea of just the difference of the two, other than you do have to have 0 down, which is great, but what are the other things that we need?
Yeah, so, couple things just around VA loans in general is, 1, they are arguably the most flexible when it comes to credit. VA loans technically do not have a minimum FICO score. It's really the lenders. They kind of decide what their minimum threshold is on what they want to lend on. We have some that'll go down to a 500 credit score, and then some are at 580, 620, and then it's kind of wide open after that. Right. So very flexible on credit. One of the bigger differences between buying 1 unit versus 2, 3, or 4 is going to be that income qualification. So if you're buying 1 unit, a house or a condo per se, lenders are going to look at your income. So they're going to look at you're leaving an earnings statement or your pay stub if you're out of the service, but just your income solely. And then your other debts that are on your credit report, i.e. minimum payments for student loans if you have them, credit cards, car loans, any installment loans, things like that show up on a credit report. Those get factored into what's called a debt versus income ratio.
Okay.
And the other thing on that debt piece is what's new mortgage payment plus monthly taxes, monthly insurance, and if there is any HOA dues versus just your income.
Okay.
Whereas when someone's buying 2, 3, 4 units, you're gonna get that extra income to help you qualify.
Okay.
And kind of the magic number is 75% of what would be on long-term rents for those other units. So let's just say for conversation's sake, you're buying a duplex, you're gonna live in one, you're gonna rent unit 2, unit 2 is gonna rent for $2,000, you're gonna get 75% of the $2,000 as extra income to qualify for.
Okay.
So 75% of 2,000 is 1,500, so you just get an extra $1,500 to qualify. So it becomes a lot easier when you add these units on because you get the extra income to help you qualify.
So you're saying that if you do say buy 4 units, you're living in one, you can use the income from the other 3 units at that 75% of what you'd be making income-wise to qualify for the loan.
Exactly.
Okay.
Exactly. Let's say units 2, 3, 4 would rent for say $10,000 between across the 3 of them. Okay. You're going to get $7,500 as extra income to qualify.
So per se, if somebody was making $5,000 a month, they add that to their income, and then that's their net income that they're able to use.
Now the income that your lender's going to use is $5,000 plus 75, $12,500.
Perfect. And then that number actually goes up against their credit cards or whatever's on their debt with taxes and insurance and everything. Yeah. That's awesome. I love that.
It's really powerful.
It's really great. Yeah. And why is it a 75%? Why isn't it 100%?
So we want to take into account, presumed vacancy rates. Mm-hmm. We all know in San Diego vacancy rates are less than 10%, most instances less than 5%. But nationally, kind of that rule of thumb that they use is 75%.
Okay, that's great. So I feel like it just answers a question because a lot of people are like, why don't I get 100%? But we're protecting you as the consumer and renter. If you do have somebody that maybe vacates the property and it takes you a month to clean it up and get it all. Maybe you got to paint it, change out carpet. You've got to do some things. Yeah, and so that's a loss of time that you're having there. That's really great. I love that. What are some other things that would be good for a VA buyer to know if they are wanting to buy, 2, 3, or 4 units? Yeah, I think one is look at having some reserves. So, it kind of cuts both ways. One of the beautiful things with the VA loan is you can put 0 down. Okay. That doesn't mean you want to have 0 money in the bank. Right. And especially when you're a first-time landlord. Okay. Stuff happens, right? Like things break. You need to replace your water heater. You need paint. You need to replace a roof. Any number of maintenance issues will come up, and when you think they don't, they do. So having extra cash reserves, I think, is really important for folks. Is there like a calculation or maybe your own personal thought on how much reserve would somebody want to have? Maybe looking into this just to help us calculate, okay, how much do I really need in my bank account, to be able to move forward, maybe, and it would help them with 2 units, 3 units, or 4, right? So totally in that way. My calculation I look at is you want to have at least 3 months of survival number, meaning what is that new mortgage payment, including taxes and insurance, as well as your other, bills and lifestyle payments. Okay. So let's say on your credit card it's $2,000, and then, with your other expenses another $2,000. You want to add all that up and figure out what does it cost to be you, including new mortgage, times 3, and you should have that liquid. And then the next goal I tell people is go for 6. Right. Because then you really will have some peace of mind. If you've got 6 months of a survival number going, that'll cover you, God forbid, you get hurt, you lose a job, something breaks, you need to replace something. How would you, on the appraisal side or the rent side, how do you even know how much each unit would rent for? Is there a calculation or a way to find that out? Great question. So one, come back to Christina, ask a real estate professional that you are working with or that knows that neighborhood. And we all know each neighborhood is specific and local, right? What would that property rent for in that zip code, in that market? The other thing you can do is check Craigslist. I know that might be a little old school. Craigslist is the way to check. You can check out Zillow. God, I hate to even say it. Another website that I really like is something called Rentometer,
rentometer.com, and it's literally exactly that sounds, rentometer.com. And there are some free tools on there where you can put in a zip code, property type, different specifications, and it'll give you average rents.
That's great. And then when they are qualifying, is there like a rent appraisal or something that goes on that the that you would verify that for qualification purposes?
Yeah, so we're gonna have the property appraised, and the appraiser is gonna do their typical sales comparison approach to come up with the value, right? Whatever you're in contract for with the seller, we want it to appraise at that dollar amount or higher. The appraiser is also gonna do a secondary report, which is called a rental survey. And the rental survey is literally just looking at what are similar properties that have sold in the last 6 months, what are they renting for? Because then that's what we're gonna base those rent numbers off of, is what the appraiser puts in that report. Not what, inflated or what we think we can use.
Yeah.
It's what the appraiser puts in there, that's what we get to use.
That's really great, that's good information. So we've covered basically credit, debt to income ratio, and being able to use that rental income as well, and then how we're able to get to that rental income is through that like appraisal, as well as just going online and having your realtor really help you figure out what that overall value would be to be able to find the right property to start looking at. Are they able to speak to you prior to kind of get those numbers? Like say that they want to look at a house and they are trying to figure out the best way to go. Is there a process that we could recommend for them to do to be able to get into the right property?
Yeah, I mean, absolutely. So I'll talk to anybody anytime. I look at part of my job as being a teacher. So if I can answer questions for you in advance before you make some big decisions, I'm happy to. You can find us online at thecarmodyteam.com. That's THECARMODY team.com, or the team text, which is 858-525-3086, 858-525-3086. But just getting those questions answered, and somebody said in advance, will make all the difference.
Yeah, because I know when you're looking at property, we always want to know, especially if we're looking for an investment property. As a realtor, I want to know what are those numbers that we're looking for. Property price, rental price, really looking at that 75%, especially when the income side of it is a lot usually tighter, right? We're really looking at a tighter income and really like staying within those parameters, because I'd hate for somebody to go look at a house and then they don't even qualify for it.
That is the worst.
Right? Yeah, so we definitely want to get those numbers in the beginning. And again, that is really why it's so important to talk to a lender as soon as you start looking for a home, because they will really be able to, and James would really be able to give you those parameters, give you those numbers, give you the ideas, brainstorm with you to see what you really can do. And if you are in that investment mindset and you're like, I'm in the military, or I'm in the Army, or I'm in the Air Force, or I'm serving my country, and I'm going to be done with this in 1 or 8 years or whatever, and I want to be able to have some residual income coming in. How can I do that? This is a really great way to be able to use your benefits as with the VA to be able to really maximize those as well. So it's really cool. I love this.
100%.
Yeah, definitely.
Great opportunity, and we are here to answer questions and just be a resource.
Absolutely. So thank you guys so much for joining us today, and we are so excited to hear from you. Definitely give James a call. We'll have all of this information in the comments. And again, this is Christina at San Diego Real Estate Live. Please like, follow, and share, and we will see you on the other side. Bye.